Morning, everyone. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and I want to welcome you to everything you want to know about insuring vacant building and land, builder's risk, owners and contractors protective liability insurance. So I'd like to introduce our esteemed panelists today. Pam Still, we're so lucky to have. She's senior underwriter at Nationwide. She's super knowledgeable in this area and is going to be running the webinar today. So that will be great educational information for everyone. And then in addition, we've got Teresa Cochran, our senior commercial underwriter, and this is her area of expertise as well. So she's going to chime in as we go along. And then, of course, we have Kaylee Bolger, who's our marketing coordinator, and she works behind the scenes to make sure that everything runs smoothly for our webinars. So welcome, everyone. And then I'm going to just mention the objectives and then turn it over to Pam. So today, we want to learn to understand the difference between these coverages, which is really the challenge, and that's why we're putting this webinar on. And then we want to better understand the needs of these types of risks and how to properly insure them. And then, when we have a combination of exposures that may require more than one of these coverages combined. So I think that's probably it in a nutshell. And I'm going to turn it over to Pam to get started.
Good morning, everyone. We will start with vacant building and land insurance. On the vacant building, what determines if it's a vacant building or if it's an occupied building depends on how much of the building is vacant. So for a vacant building, they need to be vacant 60 to 100%. We will cover residential or commercial buildings. We'll cover unoccupied buildings undergoing renovations, vacant condominiums, and vacant leased space. We do have a broad appetite. We write property coverage for risks with renovations or remodeling costs that are less than $250,000 or 20% of the actual cash value of the building. Anything over the $250,000 or the 20%, then it should go on to a builder's risk policy. We need to make sure that the buildings are locked and secured from any unauthorized entry, but there is no limit on the size of the building or the value of the building that we will look at. For vacant land, what's defined as vacant land is land with no development, no infrastructure, no existing occupied buildings, no events held on the property, and no operations being conducted, contemplated, or completed on the land. And there is no limit to the acreage size. We've done some really large, yes?
If there was, let's say, a barn or just a empty storage unit on the land, would that be okay?
That would be fine, because basically what we're looking for is just something that's not occupied. So if there's a barn or something that's not occupied, not being used, then that's fine. Actually, even if there's a barn that has, like, they're just storing hay or something in it, then that would be okay as well. We would just rate for that additional exposure on the GL side. Did that make sense?
Oh, absolutely. I get that question all the time.
Oh, that's fine. Yeah, we get that question as well. Variety of coverage options. We will write monoline GL up to $3 million, $5 million limits. There is no GL deductible required. We'll write monoline property for vacant buildings. No maximum property limit, subject to underwriting, of course. And the only reason we put subject to underwriting is if the building is very, very large, let's say a $30 million building, we might want to consider getting facultative reinsurance. We will offer replacement cost and special perils available as long as the building qualifies for that coverage. And vandalism coverage is included. In some states, we do have to sublimit. We will offer package coverage on the vacant buildings, property and GL, and there are credits available if you package them. And there is excess general liability coverage available as well, up to $25 million with carrier approval. Coverage features, there's no restrictions on the length of the vacancy. Again, vandalism coverage is included, subject to sublimits. There is coverage for independent contractors performing the renovations as well. Minimum earned premiums are 25% for policy terms greater than 3 months. The policy terms are very flexible. We write anywhere from 1 month to annual terms. And there is an ability to extend by endorsement if needed.
And one more quick question before we go to builder's risk.
Sure.
How long can a building be vacant? So let's say a risk comes through and it's been vacant already for a year or two. How do you guys feel about that?
We are absolutely fine. The only thing we ask is, what are they planning on doing with the building? Are they, is it up for sale? Is it for lease? We've had several that we've written that they were planning on leasing out, and the leases just haven't come, and they've been vacant for several years. And as long as there's no issues with the building, we're fine. We're fine with the length of vacancies. We do know that sometimes it takes a while for them to be rented out or for people to decide what they're going to do with them.
Okay, great.
Okay, builder's risk insurance. What qualifies for builder's risk? We write ground-up construction. We write renovations and remodels, residential projects, and commercial projects. With the renovations and remodels, we will also cover the existing building if needed, or we can write just the renovations and remodel exposure by itself. It is written on an all-risk inland marine coverage. It does include theft. The building owner or the general contractor can be named as the insured. Single or multiple scheduled construction sites are easily covered. For builder's risk limits, protection classes 1 through 8, there really is no limit on the total construction costs. On protection classes 9 through 10, we do have a $250,000 max TIV, but it can be submitted for higher if needed. The minimum premium is as low as $500 for an annual term. We can write from a month to annual terms. We can extend those if we need to, due to construction delays or whatever reason they need. It includes the building materials, supplies located at the construction site while in transit, at storage at any other locations. We also have coverage for soft costs, business income, rental value, with or without extra expense. Any questions on the builder's risk so far?
Yeah, please type in your questions if you have any.
Okay, for owners and contractors, protective liability insurance. Coverage is available for the owner or the contractor, requiring the designated contractor to furnish protective liability coverage. Coverage provided is for bodily injury or property damage only for operations performed for the named insured by the designated contractor at the specified location, and the insured's acts or omissions in connection with the general supervision of such operations. It can be written for ground-up construction, renovations, or tenant improvements. Renovation projects include the structural work. Project costs exceeding $2.5 million do require company approval, but we write much larger ones on that. We just want to take a closer look at them. A general contractor is being hired to handle the project. The GC is required to carry their own insurance with at least equal limits to our insured. The applicant obtains a copy of the GC certificate of insurance, and we may be able to consider projects already under construction subject to carrier approval, and those are risks that we see quite a bit. They may be written with a standard carrier, and the standard carrier doesn't want to extend them, so they come to us midterm.
All right, now this is Teresa. I'll be talking about this slide here. Let's say the owner is going to act as the general contractor. In this case, it is something that we can write. It's not going to be through Nationwide. It will be through one of our other markets. And the owner that is acting as the general contractor cannot be a GC by trade. He or she cannot have a general contractor's license in order to be eligible for this liability coverage. The carrier will write up to $1 million in the project cost, and there is no deductible under this program. And this is fine for new construction and renovation projects. And that's really all I have on the slide.
Looks like we have a question that came in, and it might be applicable to answer now. What if the insured is using a contractor that is not a GC and wants liability policy for his remodel? Who wants to take that?
Pam, do you want to answer that one?
Is that for the owners and contractors protective liability coverage?
For the ONCP.
That's not something that we would cover with Nationwide if the owner is acting as his own GC and he hires a subcontractor. Is that the question? I'm sorry, I think I misunderstood that.
I can't see the question again. She said yes.
They're just hiring subcontractors to do the remodel work. Got it.
Okay.
Maybe they're just doing some paint and carpeting, and that's it as far as the remodel goes.
Then that would be perfectly acceptable.
Okay.
Okay, perfect.
Okay. Then on the owners and contractors protective liability, we write limits up to 3 million, 5 million limits. Products completed operations is excluded because we're covering the liability, the premises coverage only. Operations performed for you by the contractor at the location specified in the deck, or your acts or omissions in connection with the general supervision of such operations, because that's what we're looking to cover. Coverage is offered with no deductible. The minimum premium is as low as $750, and there is excess liability coverage available up to $25 million with carrier approval. And then there are reasons why an owner or tenant should not rely solely on the general contractor having coverage. The GC's limits may be too low. The GC may cancel their policy midterm and not notify the insured. There are some coverage gaps. With the GC's policy, the OCP coverage is for construction-related liability only, and the insured can rest assured that they have control over the terms of their own policy. That way they don't have to rely on whether the GC has adequate coverage or not.
So thank you, Pam, for going over those. And so we have a little bit of time here, and so we'd love to have anyone type in any additional questions that they have. But Pam and Teresa, between the two of you, I think that our brokers and even myself at times, I struggle to understand these three coverages in a way that when you come across something, how to determine it is what you need. And I know that could either of you talk a little bit about how some types of risks that would require multiple coverages, and just how for them to analyze the risk and determine what application they need, that kind of thing.
Sure.
If you don't mind, I can. Do you want me to take this one?
Sure, go right ahead.
Okay. So when someone calls me or I get a submission in and it's someone's remodeling their home, and it's going to be, it could be structural or non-structural, but it's going to be, $300,000 in remodeling costs. So automatically, just from that, I know it's not going to fit into the vacant building program. So I say, okay, are they looking for property or liability? Oh, they need both. Okay, so we need to do a builder's risk to cover their property exposure, and we have to do an owner's and contractor's protective liability policy to get the GL coverage in place. And then from there, I need to figure out which liability program they're going to fit under. Are they hiring a general contractor? to do the work, or are they only hiring some subs? If they're only hiring subs, then I would need to put them as the owner acting as a general contractor to get that liability coverage. If they do have a general contractor, then we can put them under the owners and contractors protective liability policy. So does that answer your question, Ine?
Yes, I think it does. I think that helps a lot more making sense. And Pam, if you want to add to that, that would be great as well.
Sure. The biggest key to determine whether it should be on a vacant building policy or a builder's risk on the property is just the amount of the construction that's going to be taking place. So if it's over $250,000 in construction costs, then it would need to go on a builder's risk policy because there's better coverage there. If it's under $250,000 or under 20% of the building value, then a vacant building with renovation costs would be perfect.
Okay.
Anybody have any other questions? Type them in.
We'd love to hear from you because I know these coverages can be confusing, and it's something that we all of us come across. So we want to be able to make you more knowledgeable about it and allow you to help you to be able to get a quote for what your client needs. Okay, so I'm not seeing any more questions coming in, but we will be. As I finish up, we will be looking for them. So we've got this webinar was one. We do one at least once a month. So please visit our website under Resources Webinars, and you will find all of our upcoming webinars that you can sign up for. And then as well, this webinar will be published on our website so that you can go in and watch it just as you have done today, again, or have other people in your office watch it. There is a question that's coming in, so I'll step back for a moment. When can you do an HO3 with a builder's risk endorsement?
Teresa, I'll let you take that one since I don't handle HO3s.
And I don't either.
Okay.
I've never done personal lines before. Is HO3 a homeowner's policy?
Yes, it is.
I'm sorry.
Yes.
Okay.
Yes.
All right. Got it. So the builder's risk is going to be separate from a homeowner's policy. You're going to need a builder's risk policy if you're doing ground-up construction or if you're doing some heavy renovation work to a home. So builder's risk is going to be a totally separate policy from the HO3. I don't know much about HO3s, so I don't know when you don't need a HO3 policy, so I can't answer that portion. But like I said, the builder's risk policy, it's not an endorsement, it's an actual policy. That will be needed when you're doing $250,000 or more in renovation costs, or more than 20% of the building value in construction costs, or if it's ground up construction. So I hope that answers your question.
I think it does, Teresa. Go ahead, Pam.
I would think that the personal lines underwriter would be able to make that decision if they can cover the amount of construction costs under an HO3 policy. If not, then they would refer you to obtain a builder's risk.
Right, and it's going to vary by personal lines insurance carrier as to what their builder's risk endorsement will actually cover.
Absolutely.
And it may be more minor improvements that don't reach up to that higher cost level. So that may be the benchmark where the line gets drawn. We're strictly commercial, so sorry that we don't handle personal lines insurance, and so we're a little rusty on the HO3. But we do know when you will need a separate policy. So please email Teresa with any questions that you may have, or feel free to call her because she's definitely will get the answer for you relative to things like that. Also, these types of products some of them can be phone and web quoted, but check with Teresa first to make sure that she points you in the right direction for the specific risks that you need to get a quote for. And then, of course, submit your applications today, submissions at CIDinsurance.com. Our website has all of our applications. You will find all 3 of these coverage applications on our website under applications. So that should make it very easy for you as well. I don't think we have any other questions, so I want to thank you so much, Pam, for doing this presentation.
It was my pleasure. Thank you very much.
Well, Teresa.
Thank you, everyone.
Bye, everyone. Have a good day.
Bye-bye.